Hey, it's National ERISA and Long-Term Disability Attorney Nancy Cavey, and I want to welcome you to this week's episode of Winning Isn't Easy. My special guest is Cody-Hopkins. Karen is a dear friend of mine, and I think that she is the preeminent student loan attorney in the United States. I've asked her to talk with us today about student loans and disability. Welcome, Karen.
Thank you very much, Nancy. It's wonderful to be with you.
I want to start out by talking about what's happening in the world of student loans in 2022. Can you fill us in?
Sure. And there is a great deal going on. We have a great deal with the Department of Education. Under the new administration, they're announcing quite a bit of student loan forgiveness. There are two major student loan forgiveness packages that they've announced recently. For almost every student who went to Corinthian colleges for a certain wide range of dates, they're going to totally forgive the student loans because under the borrower defense to repayment, they feel that the schools did not provide proper education. Then just this week, they announced that they're doing the same student loan forgiveness for federal loans for people who went to ITT Technical Institute. So those are two school-specific forgiveness programs that they've announced, and people will be hearing about that directly from the Department of Education over the next couple of months. We're talking about a couple of 100,000 people who will get complete forgiveness. So the process will take a while, but it's going to be relief that people have earned because of the problems with the schools. Then there are a number of other programs. There are issues with the borrower, the income-driven repayment plan. They did an audit and discovered the servicers had not been properly administering the plan. So they're going to give people some special credit under that program. They're also under public service loan forgiveness, which is an important program that has not been well handled over the years. They have something called the limited waiver. So they're offering people additional chances to get credit for forgiveness in that program. There's just a whole other range of issues going on because of a large class action called Sweet versus Cardona, and they're going to settle 153 for-profit universities are going to have their students' loans forgiven under the borrower defense to repayment program. Some of those people have been waiting up to 6 years to find an answer, and now they'll get a blanket answer and get forgiveness. So there's a great deal going on with the Department of Education. In the world of private student loans, there's only really one major thing that I'm currently aware of, and that is Navient, one of the private student lenders. They also do federal work, but they do make a lot of private. They announced with 39 state attorney generals that there's going to was forgiveness for a number of people for loans, whether they're private or federal, but it's very specific and detailed. But there's quite a bit. Keeping up keeps quite a bit of it. But the main thing, I think, for today's topic is there's been a change in the federal total and permanent disability program.
All right, great. Well, let's take a short break and we'll be back to talk about that important topic because many of my clients who are getting Social Security disability or who are applying for their short or long-term disability benefits have student loans, and they always ask me, what can I do? What should I do? How do I deal with my loans? And this is a perfect topic. So let's take a break and we'll be back in a second. Welcome back to Winning Isn't Easy. Karen, this has been fantastic, but I want you to put on your hat and tell us what you think the Biden administration has in store for us, with the student loans.
Well, there's a pretty major hint that the COVID forbearance, which means zero payments are due and zero interest is accruing, that's covered about 85% of the federal student loans, is going to get extended because they've told their servicers do not send out any bills starting September 1st. The COVID forbearance, which has been extended a number of times, was supposed to expire August 31st. We have not heard a formal announcement from President Biden's offices but they've told their services don't send anybody a bill. So that's a pretty good hint. But we don't know how long. We're expecting they're going to say we're not going to start billing people until 2023. That's the major, what we're hearing from people in reports. We do know that a lot of student loan advocacy groups met last week with some of the officials, at the White House and the Department of Education. The other thing that we're waiting for seems to be that there's this discussion of whether any student loan blanket forgiveness will be given. The major conclusion everybody reaches is that President Biden may be willing to give $10,000 blanket federal student loan forgiveness to people who earn less than $150,000 per year per person. However, I've heard that one of the delays in announcing that are two strange things. One, there's a lot of demand for $50,000 forgiveness, but we don't think President Biden's going to do that. But apparently, there's been a discussion of whether there would be general inflationary impact from student loan forgiveness. And we hear they're a little concerned about, well, in the middle of the inflationary problems we're having right now, is that a good thing? We think they're going to conclude that that's not necessarily going to be the case. So I think we'll see $10,000 student loan forgiveness announced this fall, hopefully. And then the other thing is that one of the problems logistically is there are 45 million federal student loan borrowers. About 9 to 10 million of them use the income-driven repayment plans. In those plans, the Department of Education learns your income, so it would be able to tell for those 9 to 10 million if they make over 150,000. But for all of the other people, the Department of Education by itself doesn't have a way to know. So there's a concern since the two departments, the IRS and the Department of Education, have some complicated rules about when they can communicate. There's a concern that many people would have to submit some sort of application to get the forgiveness to prove that they don't earn more. And that's a complexity that I think the department has been trying to figure out how to deal with that logistical problem, which, it sounds like, yes, it would be a great idea to do the student loan forgiveness, but logistically, but there are also some people who are concerned about the 10,000. Most of my clients, $10,000 is a drop in the bucket because of the way capitalized interest and the programs have developed over 4 administrations. Lots of people, have very high balances and very high capitalized interest. So there's a dichotomy between the people who have not had loan problems, they've paid off their loans, etc. I believe student loan forgiveness should be given, not just because it should be given, but because the programs have had so many problems, mainly because of the servicing companies, that people's loans have ballooned unfairly. And it's such a complex system. Nancy, I've said this before. I personally think it's pretty awful that you have to need a student loan lawyer today, but many people do. The processes and the rules are so complicated. And so far, we've only talked about federal loans, and there's a whole other world of the private loans.
So can you quickly explain what capitalized interest is and how that has taken a very simple loan and made it balloon into multiples of what the original face amount of the loan was?
Sure. So when you take out the loans, you oftentimes don't read the fine print or aren't given all the rules. And so you think that you have a loan for, say, $10,000 at 10%. Well, over time, perhaps you have a forbearance, a deferment, you change status, you don't make your payments are later. Besides the regular interest that's accruing on the loan, at certain points, the Department of Education rules say when you change your status, we are going to take all your interest and make it part of the principal. So if you had a $10,000 loan and $1,000 of interest that had built up, they're going to turn that into an $11,000 loan that now still has interest on it. And then when you change your status again, and so many people don't understand that there's these sort of hidden capitalized interest increases on their balances that they don't understand, because they say, but I've been making payments. Well, yes, you're making payments, but the payments haven't been enough to pay the full interest. And if you're late on your payments, that's more interest. But the most hidden piece, I think, is that because of the fact that people have had to borrow so much more over the years than they used to for education in the United States, the people don't understand that when they call in and they're offered one of the now five income-based repayment plans, your payments, yes, you get in a payment that's good, it keeps you in good standing and is affordable, but you're not paying all the interest. So the interest is just growing, and it's like a side piece where your interest is growing. Yes, you're making payments, but you're not making any progress on the loan. And so the idea has been, we're going to give you an affordable payment. The interest is going to be building up, but it's going to get forgiven at the end of the 10 years for public service loan forgiveness, or 20 or 25 years for the income-based repayment plans. But people don't understand that means that the $50,000 loan they take out, when they're only making partial payments, is going to balloon over those 20 or 25 years. And those rules are not well explained. So many people show up in my office and say, I took out a certain amount. I have made payments as much as I can most of the time, but the loan has ballooned, and I don't know how I'm going to be able to pay it off. My 50,000 is now 150,000, and I don't understand how I got here.
I mean, we both agree that student loans should be paid, and that people should be making payments. But as you've explained, it's this interest on interest, this compound interest that continues to accrue. That's really, really unfair, because people are making payments generally, and those payments can be as much or more than a mortgage sometimes, but yet they're not making any progress on the balance. Do you see any proposed legislation that's going to address that? I mean, because as we both agree, $10,000 forgiveness is not going to make a dent in these student loans.
Well, I think the basic problem is that the entire system is so complex. You have basically call center employees for about 6 or 7 servicers that do the collecting and payments for the Department of Education, and they don't have the time or the skill level to take you from your level of understanding through exactly how you've gotten where you are. And so it's a difficult issue, because the complexity of the system is doing it in. People just don't get enough information, and I think there are rule changes. The Department of Education goes through a very complicated process called negotiated rulemaking when they want to change their rules. It takes 2 to 3 years to change a rule usually. Well, and they're trying to get consensus from all their stakeholders about what the new rules. They have proposed new rules. For example, in the disability, they've proposed getting rid of the income monitoring piece. And they've also, as I said before, proposed additional medical professionals who can sign these documents. In other areas, in closed school discharges, which are another way to get rid of certain loans, or even in the income-driven plans, they've made proposals to change the programs to try to simplify them. Some of the things I have heard of sound very good. Some of them still don't go far enough. And I think it's going to take the entire Biden administration, who knows what will happen after that, but to improve all the different programs and try to give people enough information. I think the biggest problem is sometimes the Department of Education forgets its own complexity. And many of the people that I talk to, they don't know whether they have federal or student loans. They don't know who the players are. They don't know the lingo of what's an FFEL loan versus a direct loan versus a purchase loan. The complexity is just, a lot of people are just totally intimidated by the process and the complexity.
So Karen, we've talked a lot about federal student loans, but we haven't touched on private student loans. Tell us about the ability to get a disability discharge in the context of a private loan.
Unfortunately, that's a very piecemeal patchwork situation. What happens is, and this is why people are often confused, is many times over the last 20 years, people have gotten private student loans, often at the recommendation of their school or someone in their family, to go get a private student loan. And oftentimes banks would give out those loans.
Right.
But the banks would not keep the ownership of those loans. They would sell them off to a group that would collect, say, a couple 100,000 loans and administer them through a servicer. And so people oftentimes, very often, they can't tell me who the loans are from. And the place that these loans, there's no central registry unless the loans are still going to show up in the 7 years on your credit report. Now, many people have older student loans long past 7 years. They don't show up on the credit report, and they don't know who's handling them anymore. But in terms of disability, it's a case by case analysis as to who owns and services the loans, whether there's even a process to apply. Some of the companies, for example, Navient and Sally Mae, its cousin, and I believe Wells Fargo and one or two of the other companies, have a not well advertised total and permanent disability process. But usually they have a very short, very doctor intensive application, which it's very hard to find out. It's hard to find out if they have a program. It's hard to find out if they have a program, where do you get the paperwork? And then if you get the paperwork, you have to fill out a section, and the doctor has to fill out a section, and sometimes submit significant records. Then these companies submit those. The most common is to have one of the life insurance companies that does other disability review. Your application gets submitted to this company, which you don't even know the name of. You don't know that goes on, but that's where your application goes to. And then they will decide if you're going to get a total and permanent disability discharge on your private student loan. I very rarely see that granted.
And you and I have talked about this potential situation and even a potential class action. Can you give us an example of what you've seen in the games that are being played?
Well, the applications ask for a great deal more medical. I mean, compared to the Department of Education, it's much more similar, I believe, to doing something like either a private disability or a Social Security disability application, where really the doctor has to convince the examiners that you are medically, physically, totally and permanent disabled. And the standards are, they're not well defined to you, the person who's applying, but they're very strict about being pretty strongly unable to do much of anything, is what I've seen. I've only had a few ever granted, and usually if they're denied, you don't get much information, and there doesn't seem to be much of an appeal process, if any. So and the mental health type of disabilities are more difficult, it seems to me, for these places to approve this. But it very often I found that even sometimes the call centers don't seem to even be aware, if when they're collecting on a loan, if that loan even has one of these processes. So and the other thing is, there's a great deal of muddiness, because many people years later don't even have a contract that they originally signed. But
Right.
that contract does govern what's going to control the issue of whether you can dispute anything or appeal anything.
In closing, anything else you wanted to tell us about that our folks need to know?
Well, I just think there's a lot of information, and there are some websites that are important. The studentaid.gov is the federal student loan main page for student loans, studentaid.gov. But a lot of people don't understand that they could log into there. You can create an account or log in if you have an account, and get a great deal of information about your federal student loans. You have to pretty well get a credit report to find out about your private student loans, and there can be some that aren't even on your credit report. There's also most of these forgiveness programs and settlements that I mentioned in the beginning of this discussion. Those have websites and they're available. You have to pay more attention. You have to be a more active consumer and educate yourself more as a consumer than people realize, or usually have it oftentimes overwhelms them. So the system is just too complex.
Karen, can you explain to us what it is that you do to help people with their student loans and to get a discharge?
Well, I do a wide variety of things. I would say that the most important and the most common is simply to sort out for a person. They show up at my office. They may have one problem, but the major thing I do is educate them. What are your student loan situations? I start out with what's private, what's federal, and I educate them. And then they oftentimes have a specific problem. They're being sued by somebody. They've applied for something and they got denied and don't understand why. Um, and then we usually try to map out a process of how do they stay up to date and what do they do? How do they, how do they stay on track, not just have they solve a family problem, but what can I do for them over the long term to keep them on a track so that they, they know when to do their annual paperwork, for example, or they know where to go to find out, what's happening.
Well, I've worked with Karen for many years, and I highly recommend her. We have put up on the screen her contact information. And in closing, Karen, I want to thank you for the time that you spent today with aiding us of student loans and discharges. I thank you, and I would urge any person who has an issue with student loans to reach out to Karen. She has a nationwide practice. She's based in the Denver, Colorado area, but she does marvelous work across the country. So thank you, Karen.
Well, thank you, Nancy. I feel the same way about your disability practice.
All right. Take care.
Bye-bye.